Many of the world's oil refineries are rushing to guarantee supplies of Middle East crude for next year. They're fearful of what's to become Russia's giant export program. Simone Foxman has the details. Simone, what do we know? What's happening in the market? And are the refiners getting the supplies that they need?
Well, our Sharon Chu and Sherry Sue wrote this amazing report. They spoke to a lot of traders who are in the market right now, both in Asia and in Europe, and they say they're rushing to negotiate these term contracts for crude next year. They're very fearful of what happens when European nations are no longer allowed to purchase ocean freight of crude supplies. So far, they say, Asian buyers at least are getting the kind of demand that they want, but everyone seems to be looking at minimum to maintain the kind of crude supplies they've already purchased, if not increase by at least a little bit the amount of crude they will take in for next year. That said, if refiners don't secure these contracts now, and if they're not successful in these term contract negotiations, there's real concerns that not everyone is going to be so lucky, particularly with OPEC cutting its output production target. So we're going to see some of the Mideast production likely to come down over the coming months. And everyone says this urgency is really driven by the increased competition between Europe and Asia over the very same supplies. That's if they want to avoid supplies of Russian crude.
And meanwhile, we've got the world's largest oil producers, Kuwait, announcing a climate pledge. Would Saudi Arabia do this at COP? Mohammed bin Salman was there himself. Now it's Kuwait. What have they promised?
Yeah, two different parts of this pledge. One is for the oil and gas sector. Kuwait says that will be net zero by 2050, and then other industries going to be net zero by 2060. This roughly falls in line with some of the other climate pledges we've seen from around the region, Saudi Arabia, the UAE, and Bahrain, roughly kind of similar timeline. And the question here is just that no details have really been outlined for how to get Kuwait there. So this is going to play out over the next couple of decades. And again, we haven't seen, concrete plans from pretty much any of these Gulf producers. That said, Kuwait has been one of the worst producers on the emissions front around the world on a per capita basis. But recently they've had some success in cutting emissions, but they've mostly done that by turning to natural gas to power power plants, to power desalination. But if they want this net zero, they're really going to have to move a bit more towards renewables. We'll see how they turn this pledge into reality.
Yeah, I think that's the perennial issue, really, with these announcements, is the differential between the rhetoric and the delivery. Hedge funds flocking to Dubai, we know that's a theme. But what's the latest shop to set up?
Yeah, Balyasny. It's a $17 billion multi-strat, normally based in Chicago. They've been on an enormous hiring spree this year, hiring some 50 portfolio managers, taking that headcount of portfolio managers to 170. And it turns out a lot of those portfolio managers, they want to live in Dubai, and that is why the firm is opening an office there, likely to be about 20 people there starting first quarter of next year. They join the likes of Millennium Management, Exodus Point, Bluecrest, and they say really there's going to be portfolio managers, traders across strategies, everything from equities, commodities to credit and beyond, continuing this push to be in Dubai. That's something we've seen across the financial sector, and Balyasny just the latest.